Hello guys, welcome back to my channel. Genoa here with Trading the Charts and Trading the Charts Pro. In this video, we're gonna actually talk about 17 stocks that I like for a long-term investment. And when I say long-term investment, I'm talking 1 to 3 years out. These are stocks that I'm buying, putting in a portfolio, and just let them sit for 1 to 3 years and just monitor the position because I know that at the end of that 3 years, based on how these stocks have performed over the last 5 years, I'm very optimistic that I will have a pretty decent return on my investment within the next 3 years. But what I want to show you today is when and where are the best time to take an entry or a long-term investment in good stocks so that you or your investment have a higher probability of becoming profitable over the period of time that you are looking to hold the investment for. All right, so first we're going to start off with a weekly chart, and technically with a long-term investment you don't really need to use a daily chart to monitor your a long-term investment. Basically, you just want to see how that investment has performed over a long period of time with as much detail as possible. So today we're using, put up my pen, we're using a weekly chart along with a 200 week moving average. We're using a 10-week moving average, a 20-week, and a 50-week moving average. All right. So typically, all these moving average here are going to show us how this particular stock has performed over the last 5 years from a technical aspect. Okay. And clearly, we're starting off with Apple. Everybody know Apple. Apple has basically transformed into a technological and hardware company. They're not just about iPhones anymore. They have built a platform to where their business is 100% based on subscription, which is the new model of making money these days. Everybody wants to have all their customer, on some payment plan where they're making a deposit of some form to the business, which is guaranteed revenue every month. So they have built infrastructure and now they're rolling out all of the services on that platform. So for that reason, Apple, as we can see, has been in a nice uptrend, and right now it is at a all-time high. Am I saying to buy Apple right now? That's not what I'm saying. What I'm showing you is that over the last, 5, 6 years, this thing has been, going in a nice uptrend. And we can see in that uptrend, it has pulled back to the 200-week moving average. Pretty, pretty nice. At least every 2 or 3 years, it comes back all the way down to the moving average. Guys, as an investor, these are the areas that you want to be sitting patiently and waiting for Apple to come back to. Whenever Apple comes to this level and you have the confirmation, this is where you make an investment. And then it runs up, you pull some of your profit, comes back down. Once you get another confirmation, you take another entry and you're looking to get the next one. As long as we're still in a bull market or the specific stock is still performing at a good level profitability and all, so that is still in a nice uptrend. Okay, so that's the number one pick, is Apple. Also, guys, this stock will be paying a dividend of 3.28 yield. So that is very good We're going to be benefiting from appreciation as well as dividend through that period of time. But the most important thing is we're waiting for this thing to come to the level, which at that level we know that it's very, very, very cheap. And we will wait until it gets there. There's no going around. We will wait patiently. If you don't already own it, you wait patiently until it gets to that level. Those are the level you want to take advantage and put in your investment, okay, for the long term. My second investment for a 1 to 5 year period is going to be Facebook. Same thing. Facebook is one of the number one social media platforms. If you want to find anybody and everybody, the best place to find them is Facebook. And I don't see any other platform really changing that in the near term future. So, what I'm saying is that Facebook has a huge advantage in terms of marketing, to the masses, which they're already doing. And for that reason, the company is performing exceptionally well. They're a $5.7 billion market cap company. They're doing a good job, and they're going to continue to do well in addition to all the new stuff they're going to be rolling out here in the near future. So for that reason, I am a long-term prospect in Facebook, but where am I looking for it to come to before I make an investment? I'm looking for it to come to the 200-week moving average, and at this level, I'm willing to make my investment and hold for the next 1 or 2 years until I've hit my target, or I've decided that at this point I want to take some cash off the table. Okay, Facebook does not pay a dividend at this time because they're still a super growth company, so that's okay. We're still very optimistic with the future growth that I'm expecting out of Facebook. So for that reason, I am waiting for it to pull back to that level, make my investment, and then hold for the long term. My number three pick, Microsoft. Microsoft, guys. If you guys don't know, Microsoft owns the Windows platform, and just like I was saying about Apple, Microsoft has got their infrastructure so big, so wide to the scale now that they pretty much, I don't want to say control the market, but they're one of the biggest players in the computer space as far as, um, Word document, all of those stuff that you use on the computer. And now they have changed from you buying like a Windows software for your computer to now it's a subscription base, which means if you ever want to run Windows on your computer, you will have to pay the subscription. What is a subscription? A subscription, as far as the company prospect, it is guaranteed revenue every month. So they're setting up and they have already built the infrastructure to ensure that they have these revenues every month. They're also a big player in the cloud computing area, which is a new thing. Everybody want to be storing in the cloud. One of the number one players is also Microsoft as well. So for that reason, um, I am a huge fan of Microsoft. Anytime it comes back down to around the 50 period moving average, I am looking to make my investment and look to hold this over a long 1 to 3 year period. Okay, Microsoft pays a dividend of 2.04 yield, so that's pretty good along with appreciation. I'm also going to be gaining some dividends, which I'm going to be reinvesting. So my number of shares are actually growing while my profits is growing at the same time. Okay. My number three pick. This one is Enphase Energy. Why do I like this one? Well, I feel like these guys are a part of the future as well because they are working to ensure or to help homeowners in terms of running more efficient AC units by, I don't know how to explain it fully, but they're able to come up with a technology right now that helps you to save on your energy bill and makes your AC units and all of this stuff way more effective, and they're one of the number one players in terms of that field. So this is like a semiconductor slash equipment slash technology play. So for that reason, I like this company. They're generating really good revenue, and for the longer term, I'm actually very optimistic about this one. So again, you can see super uptrend. Anytime it comes back down, somewhere around here, where I can get it at a super cheap price, like it did right here. I'm looking to, you know, make an investment in this company here and hold for the next 1 to 5 years. Right now, it's trading at around $52. I would not go in blazing hot, but anytime I see the stock depressed or it's at a level where it typically comes back down to, then at that time I would look to add to my position and hold for the long haul. Okay, and all of these companies that we're going through right now, they're profitable companies. They have good balance sheets. Their sentiments for the future is good. Um, Investor sentiment is good, and they're very strong, profitable companies. Okay, so before I move to number four, I'm gonna ask you, if you haven't liked, please hit the like button, subscribe, and turn on your notification bell so when my next video comes out, you'll definitely be the first to get notified. Okay, let's move on to number four. So number four, AMD. This is a semiconductor company. As you can see, they have not necessarily had the most smooth run. Way back in 2001, they were trading, around 20 something dollars. Move this over. They were trading around 20 something dollars here. They come down all the way down here, which typically this would have been a good time to pick up some share for the long term, because you can see, look at this move that we had from 2016 to 2020. These guys, they make chips for cell phones. Typically, some of their chips goes in like the Apple iPhone. They make chips for computers. You guys know the AMD storage microchips as well, that you can store additional stuff on. This company, they're pretty good, profitable. The sentiment for the long term looks really good. Anytime the stock is depressed, meaning something happened, it pulled back to some very cheap level, I'm also adding to my position and looking to ride this stock um, back up into the future. All right. So let's move on to number five. No, number six. Number six is Walmart. Everybody knows Walmart. Walmart has been around for a long time. One thing about Walmart is that I think this stock should be doing way better. So I feel like it's kind of underperforming, or not just underperforming, but I feel like it has a lot more room to grow, because clearly, back in the day, Walmart was not on top of their game in terms of competing against Amazon. But what has happened now is that Walmart has seen how Amazon has executed, and they kind of have a guide to exactly everything they need to do to get their business up, to get it competing against Amazon. And right now, I don't know if you guys are observing, but in the Walmart here, um, typically, they have cut down on actual cashiers. They don't have anybody doing the floors. They got robots doing the floors. They got all these automatic checkout cashier systems. So for me as an investor, that is good because Walmart is cutting back on expense. They're trying to make the business run more profitably, and now Walmart has come up with their Walmart Plus, which is their subscription-based business. They got their food delivery program. I feel like Walmart is actually setting up themselves to open new doors for revenue, to drive growth, and I'm looking for this stock to actually potentially double within the next 1 to 5 years. So for that reason, I am long Walmart. Walmart pays a dividend of $2.16. There be B rating, one of the major players in the supermarket space. So for that reason, they're a leader. I like them. I think the stock has a lot more potential. Anytime this thing comes back anywhere lower than where I've bought it before, I'm typically adding to this position for the next 1 to 3 years. Okay, and then I have Cisco. Again, I don't know if you guys know Cisco, but inside your house, your routers, computer parts, um, things for the cell phone, your network provider equipment, all of those stuff are typically made by Cisco. All right, so if you ever take up your Cox Wi-Fi box or something of that sort, you can actually look on there and see that this product is made by Cisco, this company right here. They pay a dividend 1.4. They have pretty good revenue stream for the last 5 years. They were in this form of consolidation back here from 2009 to 2012. But since 2014, you can see the stock literally doubled from 22 all the way up to roughly $60. But it has pulled back, and for that reason, I've took a stake in this company. I like them. I'm looking for this thing to hit back up to the 60 area and potentially beyond. So while I'm waiting, I'm collecting that dividend, and I have a long-term view on this company. All right, let's move on to the next one. Coca-Cola. This one is a lager, but over the last 10 years, look at this stock. If you bought it at around 2025 back in 2011 and you just held it for the last 10 years, this thing ran all the way up to around $60, assuming you took some profit up here, as well as you had collected that dividend of 1.64 every quarter, based on how many shares you hold. I think that was a pretty good performance for that period of time. So for this reason, they're struggling a little bit right now, but when it came down here to 30 something dollars, that was a very good opportunity to add a small position and look for this thing to, ride back on up into the future. All right. So for that reason, I like Coca-Cola, and I'm looking for them to do another 100 years because ain't nobody got the recipe like Coca-Cola. Okay. All right. Visa, man, this stock is a beast. If you bought this thing back in 2012, look at this run, man. That is what you want to see when you make a long-term investment. You just want to see that thing having no issues, just keep on chopping, 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 chopping away. All right, so typically you have the main players as far as the payment processing is going to be Visa and MasterCard. MasterCard is way more expensive, so for that reason, I like Visa better because you can get more buck for your penny or your dollar, whatever it is. Okay, so typically it comes back to around the 50 period moving average basically, and that is all you get, guys. But right here we can see that this thing fell off from 200 all the way down to 140. Guys, whenever stocks get depressed like that, that's where you come in and you make your long-term investment. All right, so I'm assuming you saw this and you took a stake right here, but if not, you just wait for a perfect opportunity and make your investment. Look to hold this for the next 1 to 3 years because I really like this. Online payment is not going away. People are not going to stop using credit cards. If anything, we're going to actually be using more of those non-cash payment methods. And as long as we're doing that, Visa, MasterCard, online payment processors, they're going to be here. The stock is going to continue to do well. So for that reason, I like this as a long-term investment. Okay, you just have to look for the most opportune time to make the investment, because if you were the guy that came in and made the investment right here, after this fall all the way down to this level, I'm not sure, you'd still want to be holding this down here, not knowing where it's gonna go. But if you are the person that comes in and bought it right here, it's pretty much a cakewalk from this level on into the future. Okay, so just look for the best opportunity to make the investment. Number 10. All right, guys. Number 10 is Disney. This is a huge company. They've been around for a very long time. They're in the movie and the entertainment business. Everyone know they roll out their Disney Plus, which is not the biggest thing about them, but it just shows how this company continues to create new revenue streams to add on to everything that they are already doing. And for that reason, I like Disney. The stock has been depressed because theme parks have been closed and all of this stuff. Are they going to go out of business? No, they're not going to go out of business. If anything, they will just end up shutting down certain sectors of their business, and they will evolve by creating new, different additional sectors to make money, because this company, they have a lot of strong balance sheet, a lot of cash in reserve. If anybody can do the unthinkable, is companies like this. So for that reason, I'm a long-term holder of this right here, and any other opportunity it presents, I'm going to be looking to add to hold for the next 1 to 3 years. All of these, like I said before, these are long-term investments. Really strong companies that I'm projecting to continue to do well within the next 1 to 3 years. And for that reason, I like all of these um, for that account, which is the long-term investment account. All right, guys, I'm gonna ask you, if you haven't liked, if you haven't subscribed, please hit the like button. Please subscribe, turn on your notification bell, so when my next video comes out, you'll be the first to get notified. Let's jump on back and look at number 11. All right, so for number 11, home improvement, guys, my number one pick for home improvement slash construction is actually Home Depot. But like the example I gave with Visa, where Visa has a pretty good price, but then you have MasterCard, which is the leader, but the price is double. It's going to be the same situation when it comes around to Lowe's and Home Depot. They both typically do around the same thing, except Lowe's, you can get more um, bang for your buck. Okay, so for that reason, I do like Lowe's. This company pays $2.20 in dividend. When it fell down here to $60, if I was awake or I was around, that would have been a perfect time to make a long-term investment. But typically, it's whenever it comes back to this 200 period, 200 week moving average on a technical basis is when you make that investment, because you can see it pulls back, nice run up, pulls back, nice run up, pulls back, nice run up. Okay, so that's what you want. That's it. As long as it keep on uptrending, you get in at these low cheap areas, and then when it runs up, take some of your profit, it comes down. If you want to add back to that position, you can, or you can move on to a new investment. But clearly, until it comes up, comes down, and then start doing something like that, this is when you want to completely move away, because it's actually losing value. But this, every year, it's actually ascending, which is typically what you want to see when you have a long-term investment. Okay. Number 12, Starbucks. Right now, Starbucks is they're having a hard time right now, but before coronavirus, they were doing okay. So for that reason, I still like Starbucks. If the stock comes back down to 68, I would still, consider this a candidate for a long-term investment as far as the restaurant space goes. But you just have to be careful, all right? But we can see over the last 5 years, typically 2015, back here, you made an investment back here, you got a nice run within a 1, 2, 3, 4, 5 year period of time. So typically when it comes down to these areas, it's a good time to make a long-term investment. Okay, because these are still profitable companies. They have a proven method of making money, and for that reason, we do believe they're going to do good in the future. Okay, as well as Starbucks pays a dividend of $1.64 per share per quarter. Okay, that's pretty good. That's nothing to complain about. So while you're waiting for the position to grow in profits, you're making dividend at the same time. And I also always recommend that for anything you're holding for a 1 to 5 year period or longer, you should make sure it is something that does pay dividend. Yes, we have some growth stock that we're willing to sacrifice the dividend because of the huge potential growth that we see the company having. But I would also emphasize that 90% of your portfolio should always be stuff that does pay a dividend, because sometimes you will hold something for 1 to 5 years and it does not appreciate. So typically, if that is the case, then the fact that you get paid a dividend will somewhat alleviate, the fact that you did not have a huge appreciation in the price. Does that make sense? Instead of it being an actual waste of a 5 or 4 year period because you did not gain dividend and then the stock did not appreciate over that period of time. So that's the reason to stick with dividend payers for long-term investing, in my opinion. Let's move on over to number 13. Number 13 is Visa. No, Verizon. This one is not the most exciting, but they pay a pretty good amount of dividend, 2.64 yield in dividend. That's pretty good. That is pretty good. And technically, you bought it in 2016 at around 46. Yeah, you had some opportunity to take some profit, but it's only up around $10. $10, yeah. But through that entire period of time, you would have been collecting a pretty nice dividend. So I do like Verizon. They're a player in the 5G space. So who knows, that may help them or enable them to generate some more revenue, push up the dividend yield a little bit more during the next 1 to 5 years. So for that reason, I do like them. They have a strong balance sheet. They have a very strong infrastructure. So I do see this company, doing good during the next 1 to 5 years. So for that reason, Verizon makes the list. All right, let's move to number 13, 14. And we have AMT. All right, guys, for AMT is actually a REIT. I don't know if you guys know anything about REITs, but typically REITs are usually they're just like a portfolio of, for example, this one is a real estate REIT. So this is a company that holds a portfolio of real estate. And the way this company works is that they pay out a huge percent of their actual revenue back into dividends. So, for example, this one pays out a dividend of 4.40 yield. Yeah, that's pretty big, guys. Not to mention the fact that this is also a growth REIT, meaning that the company is this still growing. They're still adding new stuff, new real estate every day to grow the portfolio. So one, you're getting a pretty nice chunk of dividends plus you're getting growth. And then let me tell you guys, this one is also a player in the 5G space. Why? Because this REIT specifically controls all the real estate under the cell phone towers that companies like Verizon, which we just mentioned, T-Mobile, all of these companies, the real estate that they have their cell phone towers on is typically controlled by American towers. So 5G is coming, these guys control the real estate. They're gonna be making more money for the real estate because if Verizon don't have the place or to rent out, the towers, 5G not gonna happen. So for that reason, I like AMT. They've been doing good for the last 5, 10 years, and I am looking for a depressed period to add this to my portfolio and looking to hold it for the next 1 to 5 years, collect that 4.40 yield, and look for the appreciation. It does not get any simpler than that, guys. Now we're gonna move to number 15. This one, you may not agree with me about this company, but maybe you will. Maybe you will. And it is Boeing. Boeing makes the list, guys. Why does Boeing make the list? Because around 4 years ago, this company was trading at $98, right? 4 years ago, it was trading at $98. Company was doing so well, they run up to $420. Think about that. From 98 to 420. During that period of time, they've had some ups and downs, and they had two plane crash. Corona came out, smacked them down from 300 all the way down to $98 where they were trading at 4 years ago. Guys, what this is saying clearly is that you're getting the opportunity to buy something at a price that it was 4 years ago. I think that's big. If you can buy a house, that has appreciated for $50,000, so technically 4 years ago the house was $150,000, right? But during the course of 4 years, no, I'm not doing that right. 4 years ago, this house was valued at $50,000. 4 years later, it's now 150,000. But for some reason, the owner decide, hey, if you want to buy this house now, you can pay me $50,000 for this house. But you know that, hey, there's a possibility that if I buy this house here for 50,000, I may be able to sell it back for $150,000 sometime in the future. Would you not buy the house for $50,000? Well, that's exactly how I feel about Boeing. I feel that if I can buy this for 98 or 175 right now, and not too long ago, in the very short past, it was actually worth 400 or 300. That means that there's a very high probability that I may be able to sell it for 300 or 400 sometime in the future. So for that reason, this company, they usually pay a dividend, but because of everything that's going on, they had to suspend their dividend. That's okay. That's okay. All I know is that I'm getting to buy or getting the opportunity to buy something at a price it was 3 years ago. So I'm taking my shot. Hopefully things all work out during the next 1 to 3 years and I'm able to sell this at a higher price, which based on technical analysis, I do believe that it can, based on what I've seen in several other stocks. For example, Chipotle Grill, they were trading at around 800, sold off all the way down to $400 because there was some issue with their lettuce. You know, at the time when that happened, I'm like, oh man, maybe they're gonna close on all their stores. They're not gonna be able to sell anything. Blah, blah, blah. But at the end of the day, Chipotle Grill, they figured it out, and now Chipotle Grill is trading over $1,000. If I had took the opportunity and bought for 400, I would have the chance to come back around and sell for a $600 profit. Okay, so that is a very similar situation I'm actually seeing setting up in Boeing. So I'm gonna take um, a small position right here and see what happens during the next 1 to 3 years. Okay, so as far as aerospace and defense, Boeing is my guy. I took my position and I'm looking to hold for the next 1 to 3 years. Number 16. This is CVS. This one is a little tricky. Um, 2013 they ran up all the way into 2015 up to $100, right? And then this company just started to decline all the way down to $50. But they seem to be holding the $50 area pretty good. You know, they pay a $2 yielding dividend. As long as they can hold this area right here, I'm looking for a potential move starting to go higher. I know CVS also bought Aetna, which is a insurance company. So they're a health insurance company. So that should help boost, CVS overall earnings. And I'm looking to see this company turns around because they do have cash. They do have a very strong infrastructure, but for the short term, they're struggling and they're a little bit depressed right now. So there's no better time to take a little position right here and look forward to ride this thing into the next 1 to 3 years to see what I can get up out of it. The next good thing is that they're paying a $2 yield per share per quarter for that entire period of time while I wait. So for that reason, I do like CVS and I'm looking to hold for that reason. And then last and finally, for pharmaceutical, we have Merck and Company. And this company, man, they've been doing pretty good since 2009 actually. They were at $23. Now they're at 70 something dollars, you took a position anytime around this two, 200-week moving average, you would have pretty much got paid very, very well. And now we're in that range. As long as we hold it and start move back forward, then within the next 1 to 3 years, as a long-term investment, I'm looking for this thing to potentially continue to do well. And they're paying a 2.44 yield dividend. So while I wait, I'll just take that and let this thing sit for the next 1 to 3 years. All right. So guys, this was it for our long-term investment stock list. These are all stocks that are profitable companies. They make money. They have strong balance sheet. They have a strong infrastructure. They know how to make money, and I do believe that they're going to continue to do well moving into the future. So for that reason, I like all of these guys for a long-term investment. I'm Janoy, and this is Trading the Charts Pro. If you do need some assistance in learning how to analyze charts, not just for long-term investment, but for swing trades, day trades, short-term trades, you can find me at www.tradingthechartspro.com. And don't forget to hit the like button, subscribe, and turn on your notification bell. Until then, I will see you in my next video.